Welcome to The Explainer. You know, when you look at a stock chart, it can feel, well, totally chaotic, right? Just a bunch of random zigzags. But what if there's a hidden logic to it all? Today, we're going to dive into a theory that says there absolutely is, and it revolves around one really powerful signal.
All right, so let's start with the big one. The question that I think keeps every single trader up at night, whether you're a pro on Wall Street or just getting started. Yeah, this one. When is a trend finally going to reverse? How do you know that a price that's been tanking is about to turn around and shoot up? Or, the other way around, when a rising price is about to drop? It really is the million-dollar question, isn't it?
Well, some traders believe the market doesn't just move randomly. They think it leaves clues, breadcrumbs, if you will, and they're always on the lookout for specific signals. One of the most important ones? It's something they call CSD. Okay, so what on earth is CSD? It stands for Change in the State of Delivery. Now, that sounds a little technical, but the idea is actually pretty simple. Think of the market as having a mission, right? At any given time, its goal is either to deliver prices higher or to deliver them lower. CSD, well, that's the exact moment the market seems to flip a switch and change its mind. But here's the thing. CSD isn't some magic crystal ball that works all by itself. Nope. It's actually a key piece of a much bigger puzzle, a whole trading theory called the market maker model. And this model sees market movements not as random noise, but as a predictable two-part story, almost like a curve. So to really get this whole change thing, first we got to understand the two states the market can actually be in. Right, so according to this theory, the market is always in one of these two states. You've got buy-side delivery, where the whole point, the whole algorithm, is pushing prices up, looking for those old highs. And then you have sell-side delivery, where the mission is the exact opposite, to drive prices down toward old lows. CSD is that critical moment. It's when the market literally switches teams. Okay, that's the theory. But what does this change actually look like on a chart? In the real world, how do you spot the signal? Yeah, this is key. We're not talking about some slow, gentle turn. A real CSD is a sharp, decisive move. It's a sudden, powerful price swing that basically screams, hey, the old plan is out the window, we're doing something new now. Okay, let's walk through an example. Let's say we're looking for the market to go from down to up, a bullish reversal. So, step one, the market is clearly in a downtrend, right? It's making lower prices. Step two, it makes one last final push down, maybe taking out a previous low. But here it is. Step three, this is the magic moment. Suddenly, price aggressively reverses and breaks above a recent high that was made during that downtrend. Boom, that's the confirmation. That's the light bulb moment. And the source material we're looking at really nails this idea. It says, the moment that price displaces above this high, we're now changing from sell to buy program. So that one powerful move, that's interpreted as the signal that the underlying program or algorithm has officially switched gears. And of course, this works in reverse. It's the exact same logic. After a nice run-up in price, if you see a sharp, aggressive break below a recent low, well, that confirms the switch. We've gone from a buy program to a sell program. All right, so now that we've got the CSD signal down, let's zoom out a bit. Let's see how this one signal fits into that bigger picture we mentioned earlier, this thing called the market maker model. So this model asks you to stop thinking about price action as just random back and forth. Instead, picture a complete symmetrical curve, kind of like a big arc or a parabola. You have the move down one side and then a move back up the other. So first you get the left side of the curve, right? Prices delivered in one direction, let's say downwards. Then, and here's where it all connects, you get the CSD signal. That's what confirms you've hit the bottom of the arc. And finally, you get the right side of the curve, where price is now delivered in the opposite direction, completing the whole picture. CSD is literally the pivot point. Now, here's where it gets really interesting. According to this theory, the left side of that curve isn't just a random path. It actually creates a kind of roadmap for the journey back up on the right side. Those old price levels and imbalances from the first half, they become key targets or resistance points on the way back. It's like the market is retracing its own steps. Okay, but hold on. Before you run off and start seeing these CSD patterns everywhere, there's a really, really important catch. Yeah, the source material is super clear about this. It says that to simply just look for CSD is not enough. Why? Because CSD isn't a prediction tool, it's a confirmation tool. To get any kind of consistency, you have to define when this pattern is most likely to work. You need that broader context, like what's the bigger trend doing? What time of day is it? All those other pieces of the model have to line up.
So let's wrap this up. What are the big takeaways here? Well, first, CSD is a signal that a trend might be reversing. Second, you spot it with a strong, aggressive price move against the old trend. Remember, the market has two states, buy-side delivery and sell-side delivery. And CSD is that pivot point in the bigger market maker price curve. But, and this is the most important part, it's a confirmation tool, not a crystal ball. You can't use it in a vacuum.
And that kind of leaves us with a pretty cool thought, doesn't it? If markets really are coded to deliver price, if they're not random but are full of these kinds of algorithmic signatures, it just opens up a whole new way of looking at the charts. It makes you wonder, what other patterns might be hiding there, right in plain sight?